Welcome, everybody. October 4th, the Market Update Desk with Scott Riley, NMLS 157524. We are starting the day off and actually continuing the day in the very much red. It's dripping red, as a matter of fact. The BLS jobs report came out almost across the board. It was a much better report than what the market expected. There's one area that we'll talk about here that's a little confusing. But let's break down the numbers here. So the BLS report came in at plus 254,000 jobs. Market was expecting 140,000. So that's 114,000 more than expected. In addition, there was a combined positive 72,000 jobs revised upwards to the previous 2 months. So, in actuality, we're almost plus 180. That definitely sent the bond market reeling this morning. Unemployment fell from 4.2 to 4.1%. In fact, the non-rounded number for unemployment was 4.051. 1/10 down. If we got 1/10 less, we would have been at 4% unemployment. So very, very strong jobs report. Weekly earnings were up. Everything. It was actually quite surprising. Now, within the report, I've got a bunch of notes here I wanted to go through here. So the different sectors here. So leisure and hospitality added a whopping 78,000 jobs. Healthcare up a whopping 72,000. Government 31,000. Construction 25,000. And retail, wow, surprise, plus 15,000. So those were all big surprises. The birth death model, that's the one I wanted to dive into a little bit here because I was really interested to see where that number was going to come in. I thought it was probably what helped the numbers, but it's not. The birth death model showed a negative 126,000 jobs. That stays pace with what the ADP is showing for small business. So that definitely wasn't the culprit. And didn't overestimate the numbers. It does not appear to be so. Average hourly earnings, which measures wage pressure inflation, rose 0.4%, which was up 1/10 more than expected. Year over year, average hourly earnings jumped from 3.8 to 4%, which was above estimates of 3.8%. Average weekly hours worked decreased from 34.3 to 34.2. Only a minor variation there. And weekly earnings were flat month to month, with a year over year decrease from 3.5 to 3.4%. Now remember that there's two surveys within the BLS. This was the headline. Let's talk about the household. Household survey showed a whopping 430 jobs created. Additionally, the labor force participation rate increased to 150,000. The unemployment rate fell, like I said, from 4.2 to 4.1. Another strong point within the household survey was that we gained 414,000 full-time jobs and only lost 95,000. Now, the strange thing within the report is of those full-time jobs, 231,000 were for individuals aged 16 to 19, which means that a lot of jobs created were likely lower paying. Additionally, 159,000 were between the ages of 16 and 17 of those 231,000, which doesn't really, this is the part that doesn't make sense. It doesn't really jive because all that segment of population would be in school and wouldn't be able to work full time. So that's the only part that we're really kind of questioning within this report. The U6 or all-in unemployment fell from 7.9 to 7.7. Bottom line, it's a extremely strong report. So what did that do to the market on the technical side? Well, mortgage-backed securities fell through two levels of resistance, and we're now down 40 basis points in mortgage-backed securities, which affects mortgage rates. 10-year bond jumped from the start of the day at about 3.82, which ended yesterday, and now we're hovering around 3.97. If we break through that 4% barrier on the 10-year bond, that's a very important psychological and technical barrier. We're likely going to continue to uptick in the 10-year bond, which is going to pressure mortgage rates up. I know a lot of people thought rates went down a lot because of the media. The media, of course, is behind the times, doesn't really understand the depth of the intricacies of this data. Mortgage rates have been jumping now for a better part of a week and a half. This one definitely took a hit. One positive thing that came out today was that apartment lists showed that national rents fell by about 0.5% on rent renewals, and is down 0.7% year over year. Now, this should help us long term on inflation. One other thing, the international longshoremen did settle their strike with different companies last night, so they're back working. That should ease some of the concern and tension within the market for goods and services, which could have pushed up inflation. Now, pay attention to West Texas Intermediate crude. We saw a spike over about $75, I believe, a barrel today. With everything going on in the Middle East, the oil prices are a concern because that could flow downstream into the inflationary numbers for utilities and gas. So we're heading into the weekend. We took a hit on rates. They're still really good, but don't listen to the media because they are at least 2 weeks behind when they're talking about where rates are. Follow us. We'll keep you informed. The Market Update Desk, your original singular market news source for West Michigan. Hope you have a great weekend. Call us this weekend. We'll be working to help get people pre-approved and get offers accepted. In fact, we just got someone approved last night and got them locked in before the rate jump today. 616-293-2189. Have a great weekend. Go Tigers. Game 1 of the divisional series starts Saturday.